South Africans are on edge. The repo rate stands at 7.5%, with the prime lending rate at 11%, and in just 2 days, the Reserve Bank will decide whether to increase interest rates. Meanwhile, the Finance Minister has raised VAT to 15.5%, meaning everyday essentials will cost more. This is bad news for many. But what does it actually mean for you? Whether you are struggling with debt, paying off a home loan, or investing in property, let's break down how this impacts South Africans at different income levels. The Monetary Policy Committee, MPC, will decide this Thursday whether to keep or increase interest rates. And with inflation expectations rising, experts are warning that an interest rate hike is very possible. On top of that, VAT has just gone up to 15.5%, making groceries, fuel, and daily necessities more expensive. The big question is, how does this impact your finances? Let's break it down by income level. Low income earners, 0 rand to 10,000 rand per month. For South Africans earning a low income, the two biggest concerns are higher living costs and expensive short-term credit. With the VAT increase, everything from food to electricity is getting pricier, and if interest rates go up, it will cost even more to borrow money. Impact on low-income earners. Groceries and transports more expensive due to VAT increase. Microloan repayments increase with a possible repo rate hike. Less disposable income, making it harder to save or invest. Let's look at this case study. Nandi, a domestic worker. Nandi earns 6,500 rand per month and already struggles to cover rising food and transport costs. With VAT now at 15.5%, her monthly expenses just went up by 250 rand. If the repo rate increases, her small personal loan repayments will also rise, squeezing her budget even further. What can low-income earners do? Avoid unnecessary credit. Loan repayments could get pricier. Buy in bulk before further price increases take effect. Explore cheaper transport alternatives like lift clubs or public transport. Middle-class earners, 10,000 rand to 50,000 rand per month. For middle-class South Africans, the biggest issue is debt servicing costs. If you have a bond, a car loan, or even a student loan, you are already paying a prime lending rate of 11%, and if rates go up, that number could climb even higher. Impact on middle-class earners. Higher bond repayments. If the repo rate increases, expect higher mortgage payments. More expensive vehicle financing. Car loans become costlier. Savings and investments take a hit. Less disposable income means less money to invest. Take a look at this case study. Themba and Lebo, homeowners. Themba and Lebo bought a home in 2023 for 1.5 million rand. At 11% prime lending rate, their bond repayments is 14,500 rand per month. If the repo rate increases by just 0.5%, their monthly repayment could jump by 750 rand or more, money they were saving for their child's education. What can middle-class earners do? Refinance home loans to secure a fixed interest rate. Cut down on luxury expenses to offset higher costs. Hold off on big purchases until the interest rate situation stabilizes. High-income earners, 50,000 rand plus per month. For high-income earners, this situation brings both risks and opportunities. While their borrowing cost will rise, they may benefit from better savings rates and bond yields if they have cash reserves. Impact on high-income earners. More expensive business loans. Higher interest rates mean higher capital costs. better savings returns. Fixed deposits and money market accounts offer better rates. Stock market volatility. Investors must adjust their portfolios. Take a look at this case study. Lerato, a property investor. Lerato, a real estate investor, planned to buy a 4 million rand property using a bank loan. But if interest rates increase, her loan repayments could increase by over 2,000 rand per month, cutting into a rental income. What can high-income earners do? Consider fixed-rate investments to lock in high returns. Diversify portfolios. Shift investments from high-risk assets to stable ones. Negotiate better loans terms before further rate hikes. What South Africans should expect? With the VAT hike to 15.5% and the repo rate potentially increasing, South Africans must brace for higher costs in every aspect of life. Whether you are struggling with groceries, home loans, or investments, now is the time to plan ahead and make smart financial choices. How are you personally dealing with the rising cost of living? Drop a comment below. And if you found this breakdown helpful, don't forget to like, subscribe, and share to help more South Africans stay informed and prepared. This is Kondus, and you are watching Nkari. It's time. Until next time, stay empowered.